More buyers on the street in July led to increased pending sales. Today, we are here with our month-over-month real estate market overview.
Let's take a look at what's happened over the past few weeks, and then we'll zoom out to look at long-term trends.
So looking at the numbers in the San Diego County real estate market from July to August, new listings were only up 1.5%, while pending sales increased almost 10%. Closed sales up a little bit. Days on market did definitely increase a bit, and median price edged up just a tiny bit. The number of homes for sale overall is up not even 1 point. So with all the talk about inventory increasing, and it has, but not by really that much.
So when you're out and about working with clients right now, what's the vibe on the street?
Well, the vibe on the street right now, like the last 2 weeks, has been a lot more positive. We had a couple of listings ourselves that had been stagnant, just sitting there, not really getting a lot of showings or action. Both of those sold in the last couple of weeks with full price offers. And I am definitely getting more calls on new listings. So I am definitely hopeful that the stalemate or the stagnation that we were seeing in the market, the log jam, yes, has finally broken. And I'm not saying that, prices are running away again or anything like that, but we had definitely seen a serious log jam in the market. And then over the last few weeks, inventory has plateaued. Number of pending sales is up overall, not just for us. So definitely hopeful that we're going to see a little more activity heading into the fall.
All right, well, let's check out some long-term trends, and let's get started with new listings.
Okay, looking at the new listings as we always do. First, let's take a look at attached and detached just for the last 3 years in July. July of 24 and 25, almost identical for single-family homes. But of course, it was way up from 23 to 24. But 2023 was the slowest year in real estate in 30 years in San Diego County. And then attached properties up a little bit more July to July. And then when you look year to date, definitely there have been more listings year to date. Overall, yes, more new listings and more inventory. If you look at 2019 was the last year that we had like a regular number of new listings going on, peaking here in the summer months again and again and again over the years. And then in 2020, of course, it was lower and lower and lower and way lower in 2023. And now starting to come back. We have certainly more in 2025 than 24, but still we have never returned, at least not yet, to these sort of what was being considered normal. Although if we had this many new listings right now, prices would be suffering a lot more than they are.
All right, well, let's check out closed sales.
Yes, closed sales, otherwise known as where the rubber meets the road. Those are definitely down. So we've got more listings and less closed sales. So that definitely points to real potential for softening prices, more choices for buyers, more negotiating power for buyers. But I've had so many people ask me recently, so it's a buyer's market now? Not as much.
It's softened up a bit, but I wouldn't quite say it's a buyer's market yet.
I mean, there are some parts of the country and even some parts of California that are all-out buyer's markets, but not in San Diego County, at least not yet. So the number of closings year to date, even though July is a little down year over year here, year to date, almost exactly the same number of closed sales for both attached and detached properties. Then, of course, looking at the long chart as we like to do, closings.
Kind of similar to new listings.
Yeah.
You can't sell it until you list it. So.
That's right. Although new listings were higher in 2019 than 20 and 21, but here we see more closings going on in 20 and 21. And then, of course, here's where interest rates jumped up. Fed stopped buying those treasuries, and those interest rates jumped up on us. And closings plummeted between 22 and 23, and then started making a comeback And so here we are in 2025, right about even with 23 and 24, mostly. I mean, it's not significant differences year to date.
All right, well, let's see what's happening with median prices.
Median price, yes. So again, we're looking at detached and attached here. July to July, attached prices are down a little bit, and attached prices down a little bit, detached prices up a little bit. Year to date, median price is outperforming last year. I mean, I would be surprised if this trend continues, but I've said that before and I've been wrong.
We are sometimes surprised.
Yes, we
are. Not often, but sometimes.
Sometimes. But then look at what's going on here with attached properties. Year to date, $5,000 difference in median price. And when you look at it on the long chart, kind of tells the whole story. Prices have been going up steadily since 2012. And then as soon as we get, into 2021, we see a plateau later in the year. In 2022, we saw an all-out drop in the second and third quarter.
Kind of a similar pattern over the past couple of years. It starts to drop off in the late summer and into the fall, and then picks up in the early new year and the spring. All right, well, let's check out inventory of homes for sale.
Yes, well, as promised, that is up. July to July, it's up. But I mean, when you look at this here, it's up, and the percent looks crazy, but the number of homes is actually not, 700 or so homes.
If you zoom out several years, well, like on the long chart, you can compare. We've got a few bars here, but looking back at the longer term trends, this really isn't that dramatic of an increase compared to where it's been before.
No, but there are more people listing condos for sale. There are more people in condos who are just tired of waiting and just trying to make that move up into the single family home. So if anything right now, condo prices are probably gonna suffer a little more than detached prices. Although again, these predictions are ones I really don't like to make because it's so easy to be wrong because you're guesstimating. And anyway, looking at the inventory, 2019, here it was in 2019, and it just dropped off a cliff. And so here we are, 2025 relative to 2019. Relative to years past, is just not that much on the market.
Well, the market in general has been very rate sensitive recently. So let's talk about what's going on with interest rates.
Yes, so they're down for the last 7 days, and as we've been, you and I, watching the 10-year Treasury, that's just been inching down ever so slightly, and that is having a softening impact on the 30-year fixed mortgage, which is currently sitting at 6.63%, which is good relative to where we were back in May at 6.89, or you go all the way back here to January, we were at 7.04.
Yeah, that was rough.
So we are seeing improvement right now, although it's so volatile. I mean, it's just really volatile. And when the market is kind of hanging on tenths or hundredths of a point in interest rates, it's definitely a precarious situation that we find ourselves in. And it is really interesting when you have a 7-day average that drops down a bit, you see that jump up in pending. And we saw it, just this week, I just looked at the pending numbers for the last 7 days because inventory was absolutely flat over the last 7 days. Pendings jumped up to nearly 500, where the pretty much 450 has been the trend line per week for a really long time. So you get these little slight movements in rates. It does help sell more homes.
Well, hopefully this will help to shake some things up.
Hopefully so, and hopefully it keeps trending down because that's really good for everyone. Every expert that I follow is basically just reporting it's all gloom and doom headlines right now. And whenever I see the gloom and doom, I just go and I look at the actual numbers and I see, precarious, but at least in San Diego County, we're not seeing gloom and doom just yet.
All right, well, we'll keep an eye on it for you. We'll be back next time with another update. If you enjoyed this video, please like, share, subscribe, and comment, and we'll see you next time.
See you later.